Day like yesterday and today, I mean, everything's going up. Well, not really. We'll discuss the ETF effect early in the show with Dennis. Elon gets paid. Market likes it for now. GME volatile. We think we know the reason, or the street thinks they know the reason. And how can I not mention Broadcom? What a move, up over $200. What a shocker. It's Thursday. Let's cover pre-market prep here right now.
Welcome to Benzinga's Pre-Market Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
Although holding on to those solid gains from yesterday, our new all-time closing high price in the S&P 54.2750. That's what we'll be looking at. Current low 54.26. Buck is up nice, 32 cents, 104.53. TLT back at the high of the move. We'll see what the PPI number does to that. 92.63. Crude in the red, slightly 68 cents, 77.82. Gold and silver getting hit. Gold down 1.3%, $31 at 33.23 after a couple days of consolidation. Silver down a buck, 29.20. And Bitcoin futures are up 160 bucks at 68,000, just above 68,000. Let's bring on Triple D. And Triple D, we were discussing the ET effect and how it can have, short-term effects, but maybe it's having some long-term effects in the market too. Bring in AB in the background too here on this Thursday. Dennis, I mean, there's some ugly-looking charts out there.
Yeah, like what I tweeted out just a few minutes ago. This is the ugliest up day in the S&P that you're ever going to see. I mean, the Dow probably tells a little bit more of a real story here. Also, the IWM getting hit, but you just look across the board and it's like 70% red when I'm just looking at some of the major components. The majority of stocks are down. So why is the S&P higher? Because you got a couple major components that are up significantly here. Obviously Tesla, which we'll get into that news in a second, and AVGO just ripping higher. And that's causing all the chips to go higher there too. So you've got this, effects there where you've got one group that's up so much that it's making the S&P look better than it really is. When we look at the world markets, Europe down, China down once again. Actually, China's up. So China is up. Emerging
flat. I got
down.
Flat,
yeah, pretty much flat. Or is that just the stupid 8 o'clock prints? No, it's actually is up. But Europe, getting hit. Lots of stocks getting hit here today. Cyclicals getting hit. Even some tech stocks. We got Microsoft and Meta and Google and Amazon, Netflix are all trading in the red here today. And why is that? It's, again, something we talk about on this show. One of the only shows that talk about the ETF effects within the QQQ. And I mean, these effects are so pronounced, Joel, today. And what I mean is when you're buying one or two stocks up that much, like a AVGO and Tesla are up so much, and the QQQ is just kind of barely hanging on, what do? And the QQQ is up pretty significantly too, but they sell the non-tech components of the QQQ. People think QQQ is all tech. It's not. There's 25 to 30 non-tech stocks in there. Those ones are all getting smacked. Comcast, down. You got, I'll just go through the list here. Pepsi, down. Costco, down. T-Mobile, down $2.50 getting hit here. Honeywell.
T-Mobile, dude. Yep.
Yeah, this is, so you can ask yourself, why are these stocks, why is Comcast down? Why is Costco down? Why is T-Mobile down? People say, oh, it's rotation. It's actually ETF effect. So it's rotation within the index itself. So when you have QQQ up, and it is up, but when you have those other components up so much, they got to make up the difference somewhere because QQQ is not up enough even to make up for the Broadcom and the Tesla and the chip stocks. So they knock the other stocks down. And sometimes when they really need to make it up, they'll go to a couple of the mega caps and hit them too. And that's why I see Microsoft and Meta a little bit taking it on the chin this morning, even Google trading down here as well. So it's so interesting. And there's so much money to be made, just understanding these ETF effects because one, nobody trades them because nobody understands them. We explain them to you guys on the show. And obviously, maybe some of you trade this, but the first thing I'm doing when I see AVGO going higher, I'm trying to short stocks like Comcast, which is just nonsense from a fundamental perspective.
I know.
It's complete nonsense, but it works. I short T-Mobile last night. First thing I do, hit the bid on T-Mobile because AVGO is going up so much. You know how stupid that is? But that's the reality that we live in. The ETFs drive the bus. If AVGO is going to go up 200 points, T-Mobile is probably going to go down. It's dumb, but it works.
And sometimes they reverse a little bit, like off the open, right? When things come back into line a little bit. But
It can all change. Like AVGO
yeah.
comes down and starts giving back, then they'll buy T-Mobile. And sometimes it can reverse, and sometimes they just come in and maybe, and again, this could be a big reversal day because we have an 830 number. So things can change. But all we can do as traders is take the information we currently have and make trading decisions based on that current information. As new information comes in, we adjust our trading decisions, So, maybe, PPI comes in here today, Joel, and maybe, it's light, or maybe, it's hot, and that can change everything. So you've always, as a trader, you've always got to be adjusting on the fly. As an investor, you buy good companies at reasonable valuations. That's the difference.
All right, well, let's get into some of the top headlines of the day. Let's go ahead and start with the earnings darling of the morning. That is Broadcom, of course, AVGO, and it's AVGO, and it is going. The company Broadcom reported EPS of $10.96, beat the estimates of $10.84. Sales came in at 12.48 billion, beat the $12.02 billion estimate. But the big news here is announcing a 10-to-1 stock split. So we've seen what happens, with NVIDIA, with Chipotle. You get this split effect. People are buying it up this morning. What are we up now? 15%?
14% is 1704.83. I'll let Dennis talk. I'll just give the pre-market high, and that's about all I can give you here. 1724. But go ahead, Dennis. Talk about the fundamentals there.
Well, it's just, if you want your stock to go up in a straight line after earnings, announce a 10-for-1 stock split. And we saw it with NVIDIA too. There's not, usually on earnings report, you see boom, boom, chop, chop. They see split. They don't even care about the earnings report. The earnings report immediately takes a back seat when they see the 10-for-1 stock split. And Joel, props to you. You called this on the show yesterday. You said AVGO stocks, but I think you even said 10-for-1. I don't know if you knew it was going to be 10-for-1. Obviously, you didn't know anything. But it was a fantastic call. And you know what? Up 200 points, I'm not surprised, because look what NVIDIA did. NVIDIA, over the course went up 20% before they split, and continuing to go up afterwards, which is just, impressive in itself. No hangover from the split, the actual X split. But AVGO, the report was fine. The earnings were decent. But when they see the 10-for-1 stock split, you knew the algos were just going to buy nonstop. And a buddy at Bright Trading has so many good traders, texted me, was up $100. He's like, you should just buy us 100 because it's probably going up 200. I'm like, holy crap. Here we are the next morning, because that's what happened. A couple minutes after the split, it was up $100. They just kept buying it all night, and good call by the Bright Trader. It's up 200 points. So, this is just the way splits are. When they announce them, they just go up. It seems like nonstop. Now, again, it's up 200 points here now. I don't think I'm chasing it at this point in time. It took NVIDIA, the better part of 3 weeks to go up 20% before the split. This is getting 14% in one foul swoop. So, could there be a check back? Yeah, but do you think there's going to be dip buyers below on this? Absolutely. Dip buyers will be lurking here because they know these pre-split runs, and we have a month before it, do occur.
Wow. I'm just going back here. I was just thinking about, there's going to be dip buyers in here. I'm just going back to your call yesterday, though, on the IWM. Kudos to you. You were just, I like during that interview, you were sitting back, and I saw you. And usually during, you were, you're banging away, and I saw you in the background there, and I just saw you like looking at the IWM, and you were just like, whoo. You
so
were
overshot.
astounded, and then it pulled back. But with this AVGO, it's a whole different thing because it's just been in such a strong uptrend, right?
Yeah.
IWM has not, it's been in a choppiness here. So, technicals are hard to do. Like I said, I gave you the pre-market high. If you're looking to buy this thing on the dip, then tune into your shorter term charts and try and I don't like to go any shorter than a 15-minute. That's only off the open, but just a different characteristic here with the Broadcom and Nvidia. I mean, if you were going for the split trick, that really didn't work. Shorten it
The
after
pre-split worked well. The post-split has not worked at all, and I thought we'd see some weakness post-split, but they just love this stock way too much for it. I tried to short it for a day in the trading account there and lost. And I'm like, okay, I can see what's going on here. If it can't go down, when you are looking for that post-split weakness, you need immediate gratification. That means you're not waiting a couple days for it to start showing weakness. You want to see weakness right at 9:30. And we did see that. It went down 3 points, and I was like, oh, this is going to work. But then the buyers emerge, and retail likes this stock way too much. And the whole trading, investing universe, all the institutional money managers like the stock way too much. So that's just the driver. And they see it on $110, $117, and they're like, yeah, they were going. Eventually going to be the most valuable company in the world. I still think it's going to be the most valuable company in the world. It passed Apple for a day, and then Apple said they're not having it and got it back, obviously, and took over the #1 title while they were at it. But I mean, this stock has just been so impressive. And it, again, to your point, put the AVGO and the NVIDIA together. It's hard to bet against stocks making new all-time highs. Like the IWM, we have overhead supply all over the place. So small caps have been a mess, and you're buying them up 3% yesterday. So a little more predictable that it might sell off. It was thanks to Powell, obviously, the sell-off really got ignited because he eventually did say only one cut next year, or this year, one cut. And the market was, pricing into AB, to your point. They were pricing in 2, and Powell put a stop to that in a hurry, saying probably only 1. So, I mean, that's really what hit the market after 3 o'clock when Powell had the presser. But I mean, again, when you're buying stocks, it seems like it's a momentum market where, when the breakouts start going, they go. Look at Apple through 200. IWM didn't break out of anything. It just got back to where it was last week. People are being
didn't
made
even make a
whole
new
on
high
it
of the
2 weeks
move.
ago.
It didn't even make a new high of the move. And
No.
just one other thing, just going back to relationships, and we could get to the. Obviously, we need to talk about the Tesla. Is you have Apple and Nvidia? They're kind of getting together here a little bit. They got hit on Monday. The Nvidia went, but now is that relationship? I know you look for changes and pauses in the relationship. Boy, oh boy, they're both just going up. And I can't. How did
Seems like it's
Apple get
done.
to 220 yesterday? 220.
Unbelievable.
Did you see that?
Yeah, I was wrong. I said I don't think this is the day that it's going to tack on another 10 points. So it not only tacked another 10 points, tacked on another 13. It's why you don't short stocks making new all-time highs. Blue sky trading, like that means stocks, just blue skies, nothing above. I mean, that's not the stocks you're looking to short, folks. It's the stocks that people naturally want to short. It's human tendency to sell the best and buy the worst. It's exactly backwards, though. I mean, once it broke over 200, you just can't stay bearish it. You've just got to look and say, okay, well, I'm going to buy dips. Dip wasn't even to be had. It went straight from 200 to 220. It seemed like in a heartbeat. This is not like some small cap company. Like people don't understand how impressive a 10% move in is Apple, because it's the pure market cap, the wealth being created. Like you move like a stock like GME 10% in 10 minutes. It's not nearly as impressive as a 10% move in Apple. It takes so much volume and so much power to really drive that price, for the simple reason is it's the market cap explosion. So I don't know how to bet against stocks. Betting against stocks making new all-time highs is a recipe to lose a lot of money.
Yeah, Dennis, I was like looking at that and I was like, wow, Apple, a $3 trillion company moving, 10, 12% in 2 days. Like, this is insane. And then I was like, wait, why am I so surprised by this? We've been watching NVIDIA do this basically every day for the past year. And to see, though, multi-trillion-dollar companies trade like that and move so violently. I mean, it shows you just right now how much real momentum these stocks have, because typically you don't see stocks that big move that quickly, especially not even on like an earnings report or anything like that. Just people, I mean, the Apple move was insane to go up 7% on Tuesday. And then I look at it yesterday and it was up another 5% at one point, got to 220. Just an incredible move in Apple there. But let's, Joel, you alluded to it. Let's go to the Tesla news. So, of course, heading into this week, there was a big question regarding Elon Musk's pay package. This was a $56 billion pay package that was based on a lot of, production targets and stock targets that was set in 2018. And then you had a Delaware court come in and say, no, this deal isn't void. We're gonna strike down this compensation package. And then now the shareholders had to revote on it. And apparently, Musk is saying that they have enough votes that they are going to secure the pay package and he will get his $56 billion. And I guess this is easing a lot of investor concern. The stock is trading up about 7% on the news this morning because people were worried that if they didn't pass this pay package, it would mean Musk would start using his resources and attention in other areas and not at Tesla.
I was very worried about that. Like if they did vote this down, that all of a sudden a lot of his newer innovations coming are going to be outside of Tesla. I mean, he has SpaceX, he has X, he has Boring Company, he has now AI company or something, like it seems like, he has so many dang companies, what's going to stay in Tesla? And this is the concern. I mean, I wish Musk just had everything in Tesla. Like it's argumentative that Tesla could be one of the most valuable companies in the world if he would have just kept everything within Tesla, but he's got all these other companies doing so many different things. That's the biggest risk for Tesla. It's not that, they don't come up with innovations. They have a lot of awesome things cooking. It's the biggest risk is that Musk does the cool stuff outside of Tesla. Now we know, and people have asked this before, humanoids, what if he takes those and moves them outside? Well, he's already, Tesla owns the rights on all that stuff. So it's not that simple to just take that and move it outside. But if you lose Musk, I go all of a sudden he says, I'm done with Tesla, I'm going on over here. I mean, the stock's going to collapse on that. So, I mean, you got to keep your brains happy. This does do that. One issue is, where's the 50 bill coming from?
Yeah, they got 11. You mentioned 11 billion in cash.
Yeah,
I mean,
and again, that's a moving target because obviously, they're making money and they're continuing. It's not like it's burning cash here, so they make more money every day. But I mean, it's not like they just have 50 billion sitting on the balance sheet they can pay them. So I don't know if you're going to pay them in stock or if you're going to do a little dilution here to pay it, or if you're going to figure out another way, maybe borrow a bit because they really don't have much debt. Maybe there's other ways you can do it, but it's a big chunk of money to have to pony out. Maybe they're going to do it in tiers. I'm not sure how that's going to happen, but that is an issue for sure. That now you owe somebody $50 billion.
boy, oh boy. 190. I'll just a couple things, man. That long consolidation just reflected the uncertainty over the vote. And then 2 days ago, you broke out of the bottom of the range to count the consolidation, but not a lot of people fought for it. Now you're already back up here at this 190 area that also stands as your pre-market high just above that. So right there, that's a clear path. If you're trading, trading the range, you're at the top of the range after exceeding or just being at the bottom of the range yesterday. So sustain 190 bid, not much up there until you get closer to 200. But right now, the pre-market action confirming the rally here on the must pay package up 6.5%. I mean, when we were talking about it yesterday, it just seemed like how are they going to get out of that? I mean, the way things were set up. I mean, I'm no attorney and everything, but it kind of seemed like how are they going to get out of it?
Yeah, exactly. You've got these terms you put into place. He hit all the terms he had to hit and all the goals he had to hit, and then you're going to not pay him at the end. I mean, I don't think there was a choice. Obviously they put it in place, didn't think he could hit these goals. Obviously he hits them all. So, I mean, that's just impressive in itself. But look at Tesla stock, and people ask me, is it going to fade on this? I don't know. I don't know if it holds up. I don't know if it continues to go. I don't know if this is a catalyst. Maybe this was holding the stock. I mean, the stock gone nowhere for a month. So maybe it was holding down worries that Elon Musk might leave. So you have, a little bit of good, a little bit of bad here. The good is very good because we know Musk is probably staying now and happy. The bad is you got to come up with 50 billion. So, I mean, obviously, initial reaction is we're happy that Musk is going to be happy and the stock is trading higher. Does it continue to tack on after that? I don't know. It's hard to say. I mean, the core business is not doing as well as it was, a couple of years ago. That core business will come around here, though. But the stuff coming, like I was watching that video. I watched a 20-minute video on FSD. just on the weekend with my dad. My dad's jaw is like dropping open watching it. I mean, it's awesome to watch. And like you don't realize how far FSD has come. Like they just, and he was critiquing at the driver. So he does these videos critiquing and they just do an update. He's like, well, okay, we're going to test the new update. The car drove through like a town, like a pretty busy town, like a city for 25 minutes and he didn't have to do anything. The car is doing everything. Like when FSD was out 5 years ago, it was like basically just, like stays between the lines, wasn't taking corners, couldn't turn a 90-degree corner. Now it does all that. It slows down. You watch pedestrians on the side, it slows right down, backs up, does a little bit over. But he was critiquing it too. He's like, okay, that corner, it waited a little bit longer than it had to at the stop sign. Like he was critiquing little things, like where a human, you can still see the human element is still better than FSD. But to think that a car was doing that whole entire drive is just jaw-dropping. Like I just think, like the amazement here, like my kids, like, I look at, my kid are 9 years old and 7 years old. And it just makes me think like they may never have to even get a license. Like how much safer are the roads going to be eventually? People think it's going to make it not as safe, but it's going to eventually, there's going to be a hump. Like there's a certain point where right now humans are definitely still better than FSD. But at a certain point in time, the algorithm's going to be able to drive better than humans, and it's going to be safer roads. It's crazy, but it's crazy to think this is going to happen in our lifetime. It's so cool. So, I mean, it's hard not for me to not think that this is going to be just huge for Tesla. I don't see this happening with the other auto companies. Like obviously Waymo, we I've had my buddy, Rohit send me the video. They're doing that, but that's, geo-mapped, in San Francisco. It's a little bit simpler where when you're just taking a car and just throwing it anywhere in the whole world, I mean, dirt roads, how are they reading dirt roads? There's no lines on the roads. There's some things to think about here. Lots to think about. Deer runs out in front of you. There's lots of things to think about. But man, the technology is just amazing.
Yeah, I mean the self-driving we've talked about. Tesla clearly a leader in that space now. My only concern, I guess, for going all in on Tesla based on full self-driving is just that I think you're gonna have the competition there, right? Like I think basically every major car manufacturer now is working on having some sort of automated driving assistant. I mean, I've talked about it before. Even my 2021 Toyota can basically drive itself on the highway right now. So I think in 10 years, you'll see a lot of other, Toyotas, Hondas, etc., be able to do, maybe not to the level Tesla is doing, but over
They're
time,
the leader.
Yeah, correct. And so, but but a lot of people I feel like act as if Tesla's the only one doing it, and that's just my point. Is I don't think they are. They are the clear leader and in that space right now, and certainly, like you said, Dennis, just the technology right now is crazy. It's watching being able to navigate through a city street or like a roundabout or do this.
It's unbelievable.
Unbelievable.
It's unbelievable. Watch the videos if you don't believe it, because people think we're 20 years out here. This stuff is here now. Like this is happening. It's running. You just have to be behind the wheel. But this is like running right now. But yeah, like it's not a matter you can just go to sleep. Like there was this video in Toronto, somebody had it running and the person was sleeping behind the wheel or something. And I'm like, wow, it's a little bit unadvisable here because it's definitely not perfect yet. So I don't think they want you sleeping behind the wheel. But I mean, the car probably, we're at a point where we're getting to that, where I'm going to get in my car, go for a 5-hour drive and have a nap in the back seat. Like I think that's coming in the next 2 to 3 years, not 20 years out, folks. Watch those videos. It's a game changer. Like what changed it for me is just, seeing the Waymo video that Rohit changed me. You realize how close this is. This isn't like 20 years out and it's not just fantasy world. It's here, folks. It's just not regulated, and obviously it's not perfected yet. They got the 99%, getting the last 1% is going to be very difficult. So, it may be more years than even 2, but it's not 20. I would say if I was setting the over-under, I would set it at 2, where, it's like a 50-50 coin toss. Are we going to get it here in 2 years? We're not getting it here in 1, probably. That's Musk's target. I don't think that's happening, but we're getting it here in 5. I think all day we're getting it in 5. So, I mean, you just look at Tesla and you think, well, I want to be an investor in something like this. I say buy good companies at reasonable valuations. You'll say, oh, the P is 48. It's not reasonable. But if you look at Tesla as a tech company, And you look at the stuff coming with the robo-taxis and the full self-drive and the humanoids, and now they're talking, a cell phone that's maybe, not serious, but it's talk right now. I mean, if you see Tesla as that technology company and not just a car company, which I, for the longest time, just saw Tesla as a car company, you can skip behind paying 48 times earnings for it. And remember, these earnings are down a little bit here right now, too. So, I mean, if it came to $100 at 25 times earnings, it's a screaming buy. It would be the best thing probably to happen, because I would just load up and I would just have Tesla. But I think at 48 times, there's still a path where it's not that expensive if you think about the revenue sources that are coming.
All right, other top headlines today. We're getting this one's a little more speculative, but we got to talk what's going on in GameStop. Yesterday, we had a big increase in the open interest of the same exact option contract.
Decrease.
Yeah. So, decrease in open interest, increase in volume. Sorry. So big increase in volume in the open interest or in the contracts. The $20 strikes expiring on June 21st. These are of course the same calls that Roaring Kitty bought and owned 120,000 contracts of the. I think the volume was over 90,000 yesterday, and basically all option experts were saying it has to be him. He has to be the one selling some of these contracts. He was doing it in 5,000 contract allotments, the same way he bought them.
Yeah.
And that, while, all these experts are saying that, we don't have any clear confirmation. So I want to make that clear. I'm not saying it's 100% certain that Roaring Kitty was the one selling those contracts yesterday. It just appears that way. And as a result, you saw GameStop stock trade down yesterday, getting a little bit of a bounce this morning, or at least it was last time I checked. Yeah, up 4% this morning. So I'm very curious to see if he's just radio silence on this and doesn't say anything. I feel like that might not go over well with the community. I think he needs to make a an announcement, maybe show an updated position, or explain if he did sell some of his contracts.
Doesn't have to.
He doesn't have. No, I'm not saying
he doesn't have to do anything.
He doesn't have to do anything. I'm saying that otherwise, I think some people will start asking some more questions. And some people were speculating on Twitter he might be, selling these calls and rolling over and buying some Julys, or selling the calls and buying more shares, this and that. Either way, there's a lot of unanswered questions here with GameStop heading into the open.
Yeah, and the stock clearly sold off in a straight line when we started seeing this volume go off in the same option contracts. And they're saying the open interest on Twitter, the open interest actually did go down. So now it becomes even more apparent that it was him selling. Now, this Twitterverse and the GameStop verse is saying, well, there's he's selling to get money to exercise the other calls. He's selling to maybe roll out to July, or rolling out. He's just obviously saying they're defending it in any way that they can. We don't know why he's selling, but it's very apparent that it looks like it was indeed him selling. So that's why the stock went from 30 to 25 and felt like in a straight line. It's bouncing here this morning because they're coming out defending it. Obviously the Twitterverse and Reddit and all the GameStop people. I don't know what to say about this. I have a small position in GME that I took for fun, and I got hammered on it when he started selling. I sold part of it. I just thought
we got PPI, Dennis.
I gotta get out of the way.
30 seconds.
Yeah.
Sorry, I want to hit some
Yeah,
comments
for sure.
on that too. We are trading at the highs of the pre-market session. I give you the only number on the upside, 54.50. That was your high. Your pre-market low, we're a good 20 handles off that. Let me get the S&P up here. Let me go drill down to the 1 minute chart. Nice rally going on here, really, since the old 8 o'clock rally. We've tacked on about 10 points. PPI, not as important as CPI. Let's see here. Initial small move down, but then a pop up. Looks like we're a little bit light on the PPI as well. We just tapped into the 50 handle. Yesterday's high coming into play, Haps, at 54.50.
Cool. It's light.
Light.
PPI for month
Light
over month
again.
for May came in at negative 0.2% versus the
Negative.
versus the 0.1% expected. Core PPI for May 0.0% versus 0.3% estimated. 0.5% was the prior. Initial jobless claims 242,000 versus the 225,000 estimate. So jobless claims came in higher than expected. PPI came in lower than expected. PPI year over year at 3.2%. That held steady. It was at 3.2% the month prior as well. So light numbers across the board, including the initial jobless claims coming in higher than expected.
Fairy tale market. There we go.
Yeah,
Like I said,
I got way too many
go,
positions on. I'm going to
go,
be back in a minute.
go. We got our esteemed guest coming on here in just a few minutes. Jay Woods from Freedom Capital Markets to discuss this with us. You could just go over the more details. I'll just reiterate the high from yesterday. Maybe look at that in your stocks. Relative to the S&P 5450, high so far 52, but we seem to be maintaining a bid here. What do you got for me, AB? Any more details?
Not at the moment, just those numbers. I mean, it feels like kind of deja vu, Joel. We just did a show yesterday where we had some lighter than expected inflation data and saw
Yep.
the market trading at all-time highs pre-market. And today we had some lighter than expected inflation data, and the market is
Okay.
trading at all-time highs heading into the open. So
Yeah, I don't know. Yeah, what else? Broadcom continue. Well, no, that's settling here at 1,700. Tesla did get that pop over 190, but back again. I still think that's going to be a relevant area for you here. Let me get back to the 30-minute chart, get our perspective back on things. Tesla will just show you that quick pop. Even though we're not taking out that high from yesterday, it still seems to be pretty well bid up here. So CPI gives us a good number. Also, let's look at our lie detector test with the TLT. And the TLT, another strong move here, back up to exceeding your May highs. So basis the TLT, we'll look at this 93. Well, the high of the move, not the high, not the March high, but the recent high was 93. 43. You're right there right now
wow,
at that level.
look at Nvidia. Nvidia just went up another dollar, another buck. It's up 3% pre-market this morning, almost at a buck 30 here. I mean, holy cow. And okay, so looking at Nvidia's now, because for a long time, for the past like couple months, people were all talking about, well, Nvidia's still, if you're looking at its forward earnings and how much earnings have grown, it's still not that expensive. Now the forward PE is getting around 50. If Nvidia keeps going higher, at some point, we're going to start looking at this as potentially a little bit overvalued, which some people have been saying for a while. I think if this thing goes another like 10, 20 bucks, we might need to start looking at, is it topping out? But right now it's just so much strength. And that's what Dennis was talking about earlier, the blue sky. I mean, there's no point in trying to short it up here. I'm not saying that. But at some point here, if it just keeps going up 3% every day, we're going to talk about it getting overextended. All right, let's go to our guest of the day. We've got Jay Woods, CMT, hanging out with us backstage. So without further ado, let's go ahead and give Jay our special pre-market prep welcome and go through some charts with Jay when we get back.
All right. Good morning. CMT, Chief Global Strategist over at Freedom Cap Markets, New York Stock Exchange Executive Floor Governor. Jay, I mean, what's there to say? I mean, who's got it better than us?
Yeah, it's a bull market. Let's celebrate new highs every day. A lot of mixed signals, but man, it can be head scratching and frustrating at times. But you know, we're enjoying this ride, and I'm seeing breakouts in mega caps like Microsoft and Apple. That's not very bearish. So a lot to digest. Economic data starting to slow, and heading into an election cycle where we're going to hear a lot of noise. But seasonally, I think we're going to see a bit of a slowdown. But when you look at these data points, you look at what's leading right now. It's hard to bet against what's in front of us.
I mean, you definitely have the separation in the markets, right? You have the mega caps, the S&P, the triple Qs, the IWM, though. I mean, they're getting the news that they wanted. I'll look to see how that's trading. I'm sure it's trading up a little bit.
It's
Yeah, it's
up
back.
small.
Yeah. I mean, is it? No. I mean, is this just another head scratching head fake like you got yesterday, or is it truly the time to, maybe not exit the? I mean, obviously, when things are going, the momentum going, what are people just give up on the catch up trade with the IWM? Really wait till we get that first rate cut? What's your take on that?
No, I think you need to have exposure to the small caps. It's been a grind. But if you think about when it moves quickly and it moves over 4 to 6 weeks. You look back at the last quarter of last year and that run it had was explosive. It is setting up right now, technically, to have another one of those moves. It's just going sideways. It's watching paint dry, but it's making higher lows. We get above 210 in that IWM. And I think what we're going to do minimally is challenge old highs. So you got a nice run just to get to all-time highs. And if you look at every other sector in the world, minus the Dow right now, we're making all-time highs. I think it's going to be a catch-up trade, and when it happens, it's going to happen quickly. So you need to be in the space, but under the hood, it's not the best-looking sector in the world. But I think this is going to be a market when we get to that year-end, that election cycle seasonality. This is going to be the one that's going to give you the best bang for your buck. So you have to be in it. Timing it. Good luck. It's not going to be the easiest thing, but I think the IWM is going to play catch up, and you have to have exposure there.
Jay, I mean, when you're
It's incredible chop here just on the number. They ripped it. And I mean, let's just move away from the markets here and just take these inflation numbers at face value. I mean, we get two light numbers in a row back to back here. And this one's significantly lighter, minus 0.2% versus plus 0.1%. Powell yesterday was talking about, everybody was thinking, oh yeah, 2 rate cuts for sure, coming this year now. He kind of said one. And the market didn't like that, and we sold off on that. Does this data point that we get here today, can this change the Fed's thinking here? Does this put 2 back on the table?
I don't think it's going to change the Fed's thinking. I think the CPI and the PCE obviously will be the main factors, but this is trending in the right direction. The jobs numbers are trending in the right direction, and that's what we need to see. I think Powell wants to do one cut by the election. It just because I think that last rate hike was unnecessary, but we don't need to do anything. The market is making all-time new highs. This is our new normal. This higher for longer narrative, it's normal for longer. We're back to where we were, us older timers, Joel. We remember when interest rates and mortgage rates were at these levels, and we were happy about it. It took a long time to get here. The market has digested this move, and we can argue it should have been done 4 years ago. We tried it in 2018, and what happened in December 2018? The market, tanked a little bit, and we had a president that was much more vocal when it came to being critical of the Fed, and I think that did have an influence. Then you throw in COVID. So right now, given where the market is, given where jobs numbers are historically, this one data point is going to be good for today, at least the first hour of trading, but it's not going to move the needle overall. I think what moved the needle yesterday was the dot plot, and you said it. Now they went from possibly 3 cuts to 1. And do they really need to cut? I don't think they do.
No.
The market and the earnings from these select companies keep rising. So we're doing all right. So the soft landing narrative, it's happening. It's happening right now. We are landing softly, and we're landing with these higher rates. So, it's not going to move the Russell like people want it to move, but the Russell's starting to trend up. If it breaks out, watch out. It's got a long way to catch up just to all-time highs, and I don't think that's really saying much.
Jay, I mean, if you look at the, just overall market, S&P 500 or Qs, whatever you want to use. I mean, last time where we were at all-time highs, or the last time we were at all-time highs and had a big sell-off in, early 2022, end of 2021. there were a lot of, it was kind of different drivers. You look at like the Cathie Wood stocks were, going crazy, and Bitcoin was at all-time highs, and there's all the speculation. This time around feels a little bit different on all-time highs. Do you think we are at risk of having a, similar 20% drawdown at any point? And if so, what would be the things you're watching, the charts you're watching to help give you signs that could be, coming?
Yeah, I don't see a major drawdown coming. We had 5% correction. I thought we were set for another one. It happened in the Dow. It didn't follow through with the major indexes because of the rotation. And think about it. We're 5 months in now. We're starting our 6th month of the year. We've had 5 different leaders each single month as far as S&P select sectors go. Now, what's leading? What's leading is what you want to lead: technology. Now, technology is bifurcated. You look at the software stocks. I'm going to watch Adobe closely today. Technically, Adobe. Let's just drill down on that before I get back to your question. That's at a very interesting level. Technically, it's in a downtrend. 340, 350 major support. The 50-day moving average is declining, and it's below that. Can this be the time they turn the corner? 11 of the last 15 quarters, they've traded lower, an average of 6.6%. So let's see if all of a sudden we see some of these software companies that have been beaten down because there's no AI story. Look at a Snowflake, look at an Intuit. And maybe this can help the software. Salesforce, another one. Oh my God. It's got a big gap to fill. That's where I'm seeing the weakness in technology. But what's leading? The big three. And now it's NVIDIA. Still, it's RSI. We're overbought. We're at 76. But look historically at its RSI. Forget the multiple at 50. But technically, it can stay overbought for a long period of time. And their growth is tremendous. But what I look at is the leadership. And then I look at Amazon. Can you put up Amazon on a weekly chart? 5 years?
Sure. Yeah, I'll do it.
I mean,
yeah.
It still hasn't made its move. It still hasn't made its move. It got back to where it was. This is one that I think could lead again, and consumer discretionary has been trailing. I know that's Amazon and Tesla. I think this Tesla move is an opportunity to short the stock. It could rally to 200.
How come?
How come? Look at the long-term chart on Tesla. Look at the trajectory. And then let's talk about Elon Musk a little bit. Is he there? Is he all in? This pay package deal, it should be approved. I mean, let's think about it. The guy was told, if you can meet this metric by this time, you're going to get this money. Well, he did. And so I don't know why this is such a big deal. Yes, the pay package is exorbitant. I can't say that word. It's just a horrible word.
Tough word.
But the trend continues to be down. And when you look at the EV space, it's just not the growth industry we thought it would be. When the big companies, look at Toyota Motors. Toyota never even embraced EV, and it's been the most successful car company out there. Ford and GM, the hybrid models are what's working. The pure play EV stocks aren't. Although you want to see an interesting stock that's about to reverse is Blink, BLNK. I don't really look at these micro caps too much, but BLNK, if you look at this on a long-term basis, it just broke a downtrend. It's getting back above some key moving averages, and it's making higher lows. It has room to run on a reverse. These aren't stocks I tend to focus on, but when my 19-year-old brings it to my attention, I'm like, let's take a look, because he's looking for these cheap ones that could pop. That's one I'm keeping an eye on. But overall, the EV space, it isn't what we thought it would be. And I heard you, Dennis, before I came on, talking about, hey, a year from now, we're going to have those self-driving cars, and we're just going to, I want to have a few drinks after work and get in the car and let it drive me home. Listen, I thought we'd have flying cars at this point in my life, and we don't. So I'll say sold on here. 1 year from now, we're going to have self-driving cars.
Two. I said it for two.
I'll say sold to that as well. I hit that bid, but
he hits that bid. He's a 10-year.
But Tesla, to me, it's a broken down stock. Every rally over the last 2 years has been an opportunity to sell it. I don't see anything fundamentally changing. People are nipping on their buds, as far as competition goes, and it's too reliant on China, and I don't trust the China story. So it's a stock I would avoid. I know when I go online and I talk negatively about Tesla, I get more hatred than anything else, other than
nothing like GME. Try GME, Jay.
GM.
Just give GME a
Oh,
try. Say something negative
I've
about GME
talked
on
about it. I
Twitter.
refuse to go negative or positive. That's interesting. But you want to talk about GME real quick? I mean, even his loyal fan base has got to be a little upset right now because that was a train wreck. I described it in my weekly newsletter. If a train wreck and a dumpster fire had a baby, it would be that live stream that Lori and Kitty did last week. It was, if you're looking for some reason to get into it and a momentum, there's no cause. There's no really rallying cry. He bought the stock. He's taking a big gamble. I don't know where he got this money. I mean, did he not pay taxes on what he made? Did he not spend money over the last 3 years? I don't understand how he had this, but yeah, good for him.
Gotta have a backer.
I'm not
There's
gonna,
gotta be a backer.
listen, there's so much more to the story we don't know. It's going to make a great sequel for a movie. He could see
maybe he got some
run.
money from the movie too. Maybe he got some money from the movie.
You know what? Joel. That's a great point. I didn't even think of that. Yeah, I would hope so. It was a very entertaining movie. Did you guys get sound bites in the movie? I didn't get any sound bites from back in the day. I know you talked about it a lot. But they seem to take the clips from just the major networks, and you're right there. You're right there.
Right there, yeah, we're right there, right there. Mood on the floor, Jay.
Mood on the floor.
Yeah.
We're in a summer slowdown. There hasn't been much going on. We had a double feature of fireworks yesterday with the CPI number. That's the one number that moves the market more than any other number. So we always anticipate that. We got it, and then we got a little water dumped on that fire later in the afternoon when Powell spoke, and we didn't anticipate him to say anything other than the boring one data point at a time. So now we're at the PPI, and it's not going to move the needle. And then next week they go and they talk. The quiet period will be over, and we'll hear Neil Kashkari make the most noise because he loves the camera. I know Mester is out there. She may be out there today. But we'll hear about more of the dot plot and what their thought process is. But yeah, let's get to 3% before we even start talking about their 2% goal. I think in their minds, if they get to 3%, they've done their job. They avoided disaster, and maybe they can throw a cut too. But there's no reason. I just don't see why they have to cut rates. We're absorbing this so well. It's just not time.
Are they still playing jokes on people on the floor?
Well, Joel, there aren't too many people left to play jokes on, unfortunately. You got to come down. Yes, we do. We still do the whoop whoop on 3-day weekends. It'll be very interesting. We have a Wednesday off next week. Will they do a 3:33 whoop whoop before a midweek holiday?
That's a big question.
They may. So it is a good question.
What about putting tails on people?
Powdering shoes, and I'll play this with you, Aaron, because we haven't met. But Aaron, quick, tell me how many 1-liter stock symbols are there? 50, 60? We do that to the interns all the time.
20,
Aaron, you're not
23.
answering my question. Thank you. It's 21, by the way. No N, P, Q, X, and Y. But when you put someone under pressure, they'll be 50, 60, and then Aaron, you're very. I applaud you, by the way. And then they stop. They think, no, they can't be more than 26. We have fun, but technology has changed everything. It's changed the way we're trading. It's changed the way we're communicating. So the pranks. It's hard to pull a prank because you can't hide in a crowd of people when you do something like powder shoes or put someone's tail on. There will be wagers on how many, hot dogs can you eat in 10 minutes? Can you, we'll get the young guy and, hey, can you drink a gallon of milk in 30 minutes? They still think they can. Man. Their stomachs will explode. The saltine crackers, can you eat 4 saltines in under 2 minutes? You can't.
And whistle.
Yeah. Well, whistle. Good God, just stay out of the way if someone's trying to whistle with saltines in their mouth. But unfortunately, it's still the greatest place in the world for me. But a lot of those crazy stories, those are just stories now. We're well behaved. There are too many TV cameras down there to really get away with some of the shenanigans we used to.
Okay. All right. We've been. Yep. Anything else, Jay or Aaron? We'll let Dennis or Aaron. If not, we'll let Jay Woods go here, Chief Global Strategy, Freedom Capital Markets, giving us a little humor here. Pre-market prep. We really appreciate it. We'll dial you up again real soon. Also, I want to give a shout out to Jay. He joined me on my draft special.
Oh
Fly,
man,
Eagles, fly. We had a lot of fun on that.
that was a blast, and I followed Ryan Dietrich, and the whole team there did a great job, and some good analysis, by the way. Like that was what was really impressive. You guys knew your football, and like every pick coming up, we had a good sense of what was coming on, and I want to say kudos to you and those that missed it. Tune in next year because the team at Benzinga did a great job.
All right, thanks, Jay. All right, we'll let you go. We're gonna go. We got a leak going on here, Dennis. Definitely a different price reaction that we
Oh my
had
gosh.
yesterday.
I did not have this on my bingo card that we would come in that light on the PPI, rally up $2 on the IWM, and then give it all back 20 minutes later. They just don't like small caps. Bottom line. I mean, the data from the last 2 days has been everything the small caps need. Obviously, Powell put a little damper in it, but I mean, we rally right back up on IWM. Bring it up. S&P tells us no story here whatsoever.
Yeah.
Bring up the IWM. It went to 207. Oh, that was 206.
That was yesterday. Yeah,
206. We
Yep.
just rallied $2 on the IWM, which I would think warranted. The TLT is up. Like it's looked good. I would think that, that makes sense to me. And they give it all back. I don't know. Do they come in and buy the dip here now? I got to tell you, if you're a small cap investor sitting here waiting for the catch-up trade, you get 2 inflation points that are light, and the small caps are barely up. That's telling you, you know what it's telling you? There are so many bag holders in here. There is so much overhead supply that it just can't get out of its own way. And that's the issue. It's so hard. The catch-up trade is so hard because everybody is in it. Everybody is stuck long. People don't want to take losses. That's like China, IWM. And again, remember we went through this exercise in my long-term portfolio. All these stocks that I was going in, these underperformers that were the catch-up trade, they're all still crap. And you know what's good? What's good is the ones you were chasing, buying the stocks at all-time highs, and they just go higher. So tough, man. Tough to be an investor in small caps when you see a reaction like this. Now, again, maybe they're going to buy it up. Maybe cooler heads will prevail. Maybe institutional money managers say, look, maybe this will change Powell's mind. So I'm not just writing them off here yet. But, man, if you're overweight small caps and underweight mega cap tech, you are so massively underperforming the market. And it's, again, on a number like this, like these numbers here. This is what small caps needed for the catch-up trade. And the mega caps are leaving them in the dust. Apple goes up. I didn't have that on my bingo card yesterday. Nvidia would be way up. Apple would way up. They don't need the lower interest rates, and they're the ones benefiting the most from it. Mega cap tech just continues to win, and everything else just is underperforming.
Yeah, I mean, just seeing the small caps, it's clear you've had your market darlings this year, and the small caps, the IWM has been the exact opposite, just failing to. And that was what I was trying to, my point I brought up with Jay Woods is that in 2021, you did have like the IWM and these small caps kind of leading the charge toward the end of that bull market cycle. And you looked at basically anything in Kathy Wood's portfolio was hitting new all-time highs. And then the story now is different with the market at all-time highs. And to Jay's point, he said that we like that who's supposed to be leading the market now is who's leading the market versus some of these smaller names. But speaking of smaller names, let's go ahead and talk about some Dave & Buster's. Ticker Play reported earnings. And I mean, Joel, you told us that when you passed by, the parking lot was full when you did it, but that
was a while ago. Yeah.
Was that last quarter? Okay.
That was.
So Dave & Buster's reported EPS of $1.12, missed by 58 cents there, almost 50% of the EPS. Revenue of $588 million, missed by $28 million. And let's see, any guidance? Not really, just the revenue and EPS missed, sending the stock down 10%. The company did announce, though, that you will be able to bet on some of these arcade games at the location, so that might help drive some revenue there.
Spike
This
down to 42.50, back up to 46. That's a technical. Dennis,
this is
where's
just a
the
tough
AI?
story. It's a
Where's
tough
AI?
chart. It's a tough story. Stocks been going straight down for 3 months. Bag holder centrals all over the place here. The stuff is just not working. It's honestly back to the momentum market. The stocks and downtrends just continue to go down. The stocks and uptrends just continue to go up. I mean, buy dips on stocks and uptrends, sell rips on stocks and downtrends, and make money. That's just the way this market is built right now.
I know it's I guess a little bit different because Dave and Buster's is like a full bar too, and you can get food there and drink beer and stuff. But I'm pretty sure Chuck E. Cheese like filed for bankruptcy or closed a lot of locations recently, which can't be great news for Dave and Buster's. I mean, it's like the closest thing
The
I can
adult
think of.
Chuck E. Cheese.
The adult Chuck E. Cheese, exactly. And so I don't know, Joel. You'll have to let us know next time you drive by Dave and Buster's how the parking lot's
The
looking.
parking lot indicator, yeah. You're well off that pre-market low just from a technical perspective. So I think you'll thicken up a little bit as you go back towards that area, the pre-market low 42.50. But just like on a relative base, I mean, still up for the year, which is in what. No, it's not up for the year. It closed last year at 53.85. I'm looking at the December low as your next major support. That's at 40.56. David Buster's, and I just looked at Fun Cedar Fair. Oh, that had a decent day yesterday. That had a much better day. But that's it, right? For the Fun, what's the other stock? Is it even around anymore?
Six Flags. Yeah, it's
Is
been
that still
flying.
around?
It's been moving up too. Yeah, Six Flags still there.
Okay.
It's
Okay.
actually, but again, you're looking at a stock that was $70 in 2018, and here you're 6 years later, and it's $29. I mean, is this where if you're buying this, you're playing for the catch-up trade? I mean, the catch-up trade just doesn't seem to catch up. I'm learning as I go too, folks. Like I've always
Yeah.
been a contrarian investor, and you just see the way the world is moving. It's the mega cap tech continues to be, like the driver. Like, and again, like you just think about Amazon, and how do you bet against them with everything that they do, the stocks at the highs, and then you think all these other retailers, oh yeah, well the other retailer is going to figure it out. They're going to get their online presence and figure it out. And you know what? They just can't. I mean, even Walmart, which is obviously, one of the mega caps, and Walmart does everything well in the physical stores, but they can't figure out online worth a damn competing to Amazon. I ordered that one thing, those sports card holders, Joel, on Walmart. So I ordered the same ones on Amazon and Walmart. So I ordered them on Walmart, and they told me 2 weeks, and I ordered it, and I was like, oh, and then I went on Amazon, and they told me 1 day. So same sports card holders. But I'm like, well, I need more anyway, so I'll just order some from Amazon too. I got the Amazon ones the next day. I ordered those on April 29th from Walmart. I still don't have them. It's June 13th. I called customer service yesterday to say, hey, what's up? You haven't sent these yesterday? So I'm waiting on hold, and they said it's going to be more than 10 minutes. So I'm like, okay, I'll give them my callback number to call me back. They said, we can call you back. You keep your line in the queue. They didn't call me back. Walmart online didn't bother to call me back. They suck. Maybe it's just Walmart Canada that sucks, and maybe Walmart US is awesome, but they're online. I will never, Walmart, if you're listening, I will never, ever, ever buy something from you online ever again. I'll go to your stores. Your physical stores have lots of stuff in there. I'll go in there, buy groceries, and do stuff. I will never, ever, ever buy something from you online ever again. So, and I just told 2,100 people how bad my experience was on Walmart.ca. So maybe it's just Walmart Canada that sucks, but holy crap, figure it out. Call me back when you say you're going to call me back. Brutal.
The only other thing
That's to my point to Amazon. Why bet against Amazon? They do everything right. They got same day delivery, for crying out loud, Joel. I ordered the same sports card holders. 2 months later, don't have them. 1 day later from Amazon, they're at my doorstep with a little smiley face, the little Amazon smiley face. Delivery with a smile. Love Amazon.
Well, we talked about the parking lot indicator with Dave and Buster's. I remember a couple months ago when I went to Costco on a Saturday, and I said, I'll never do that again, but I will buy the stock. I need like a pre-market prep historian or someone who's keeping records to tell me when that was, because I'm pretty sure Costco's up like 20% since I made that call. But I wonder about Costco's online. I mean, I think you can order stuff Costco, get your order ready, show up, and just pick it up versus going through the store when it's packed and it's like impossible to get around. But this is one
Here's
that
another one. My wife ordered from IKEA online. You think IKEA has it going on? They said this is in the delivery. They couldn't deliver to the house. They had to deliver because it was a bigger thing, and they had to deliver to their local store. So anyway, so it's got to come from Toronto to Barrie because I'm up in Georgia, so Barrie's the closest one to me. It's supposed to be there a week and a half ago. I'm ready to go, and I just check. I'm like, oh no, it hasn't left yet. Well, why hasn't it? It's 2 weeks later again. It hasn't. Why does everybody suck at this? Amazon doesn't suck at this. That's IKEA. That's one of the biggest companies in the world. Why do they suck at it too? I mean, maybe that's just a coincidental experience, but I ordered from 2 different places, IKEA and Walmart online, and they can't figure out how to deliver it. And Amazon's at my door every day. There's never even a late delivery. Hardly ever that happens. I mean, I'm sure it can happen the odd time, maybe on Amazon, but they're hitting like 98%. I mean, Amazon just has it going on. I'm obviously my wife owns Amazon long-term account. Not selling that because you know what? They just got it figured out.
But if you order online from Costco, like you can't get like the little samples and stuff.
Oh, that's a good point.
Yeah, we like that too.
And also, I mean,
Costco's an awesome company.
You buy some big stuff at Costco, right? You buy the paper towels or like the milk. I mean, that's some heavy stuff to ship and everything, and it's fun going to Costco. But all right, well, let's wrap things up here
Yeah,
on
9:01.
this Thursday. You got anything else that you wanted to cover?
No, we hit all the big headlines: Tesla, Broadcom, Roaring Kitty, Dave and Buster's. We went through some charts with Jay, so I think all in all, it was a good show. Joel, who do we have joining us tomorrow?
Todd Gordon. Todd Gordon is going to
Inside
join
Edge.
us. Inside Edge, and
Nice.
boy,
We
we
love
got
Todd.
to talk to him about this Celsius Holdings. Holy mackerel! Not
That's
able
going from bliss to piss.
Yeah, not able to
In a
catch a
heartbeat.
bid. Yeah, we'll get his takes on that. His fundamental and technical approach is up there with just about anybody on Wall Street, thanks to Jay Woods. And I just overall market here. I mean, if you want to call the double top of the S&Ps, you can. That has probably not been the most profitable trading strategy, but we'll see. Right up there, at least you got a boat. At least if you want to short the thing, give yourself 15 handles. See, if that's it. The only technical thing I'm seeing, and as far as that goes, look at your stocks. Look at the highs from yesterday as potential resistance, unless you got something like Broadcom. And let's see if we can hold today's gains.
All right, there you go, guys. Live trading will start up right now. This stream will redirect you there. We'll see you guys tomorrow morning. Todd Gordon, a great guest. You do not want to miss that one. We'll be back 8 a.m. as always. Peace and love, y'all.